Good afternoon. This is Tom Alexander. It is Sunday, June 29th. It's about 5:23 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekend update for the week of Monday, June 30th. July 1st, Tuesday, will start the third quarter, and the second quarter has been unbelievable. And we're going to talk about that a little bit and how that might play into how the market develops going forward. I want to share this. I see a lot of people talking about, and there are divergences all over the place now among and between the indices. There are even divergences in short-term measures of market internals. I'm going to show that. But in the bigger picture, this is something that I want you to make note of. This is the SPY SPX, same thing. Uh, Below, we have the cumulative AD line. Now, the cumulative AD line is making new all-time highs at this moment. In the report, and I'm not going to go back and show you every single significant top since 2007, but I did do that, and I put that in the report. So if you want to see that, and I strongly encourage you to look at, you can do this. Go to alexandertrading.com. Click on weekly update. It's free. And then you can click on the weekend report for today, or today's report for Monday, the week of Monday, June 30th. But you can also go back several years and look at the weekend reports. But in this weekend report, I have a bunch of charts that I'm not going to go through on the video, relating to what the market looked like at very significant tops, in some case, bull market tops like 2007, 2020, et cetera, et cetera. And what I did, I put in here the cumulative advanced decline line at those tops, and I also put the same time period, the internals that we're going to go through here in just a minute that are showing a divergence at this point in time. But again, you can go to the website, you can see the charts here. If you would like, you can download a PDF and you can print that out, and you will have all the charts and more that I'm going to show you today. So let's just get into it. All right, here is the SPX. Now, this is the market profile view. This particular profile schematic is a profile unit comprised of quarters. Each letter is 1 week of trading. Monday will complete the second quarter. So this is the second quarter auction. We're closing right here, just a tick or two below the all-time high set on Friday. This has been one of the most vertical quarters that you are going to see, which is it's somewhat of a chronological coincidence because the low was in April and we've been straight up. We're up almost 27, 28%. Now, are we in a bull trend? Absolutely, we are in a bull trend. Could Monday be the market top, or was Friday who knows? But that's not the way to bet. Again, we have all-time highs in the NYSE cumulative advanced decline line. We've had very little pullbacks in this rally off of this April low. I do think that'll change. I do think that we'll see a more two-sided market going forward into the third quarter and into the end of the year. I don't think things will be as vertical as this, even if they are higher. We can go a whole lot higher, but I think it's extremely unlikely that we go higher at the same rate of change that at which we've been in since this April low. If we look at, I'm just going to run through the indices real quickly. This is a weekly bar chart of the SPX. You can see this is last week. Last week was extremely strong. Last week's low is going to be very important. Last week's low double bottomed against the previous week's low, reinforcing the fact that this is a very important low on an intermediate term basis. And then below there, you have this level where the gap started. So that's the SPX, the NDX. Well, let me show this view. This is back to the SPX. Now, there's a lot of stuff on here. I typically do not like to put a lot of stuff on my charts, but this is analysis, and I think it's interesting information. So over here, you can see we're up almost 28% off this April low that has occurred in 56 trade days. Now, we are only up 5% for the year because we had such a big dip into this April low off of the really the high end in 2024. And then what I have done here, I have sort of uh, shown the legs up in this rally from the April low, and obviously they've been relentless. Uh, if we were to, if this leg from this low, Friday week's low, were to carry as far as the initial leg did, we'd be up another 13%, which would put us in the mid 6,700s. I don't think that's going to happen. I think we're going to again, we're going to see a more two-sided market. So I just did this fun little exercise. There's nothing magical about these numbers. I just did it to give some perspective about how strong this rally has been, uh, how shallow the retracements have been. The biggest retracement was very early in this rally. I think this was, let's just see, I think this might have been 7% from the close, 6.6%. And the other retracements have been minuscule. The second biggest one was over here, and it carried less than 4%, just a little over 3%. So do I think we're going to get a more rotational market with more 2-3% retracements in this next quarter than we had here? I think that's very likely. Now, short term, I'll get to that in just a minute. I'm going to show you the internals. But let's take a look at the other indices. Here's the NDX. Obviously, the NDX is extremely extended. The NDX is up 5% in the last 6 trading days. We have the New York Composite that has traded to a new all-time high and closed a new all-time high ground. The equal weight S&P, this is a weekly chart of the equal weight S&P. It is lagging. The Dow is lagging, but it's starting to catch up. It's less than 3% from a new all-time high. The Russell, of course, is lagging. It has been lagging for years, frankly. The New York Composite, I mean, the NASDAQ Composite, all the stocks listed on the NASDAQ exchange went to a new all-time high. So this move is being confirmed, even though there are indices that have not joined the party yet. I don't think the Russell will join the party. I would not be surprised to see the Dow make a new high before we have some sort of significant retracement. But the momentum here is extremely strong. Next week, by the way, is a holiday week. It's the 4th of July holiday in the US. That means that volume will begin to drop off dramatically beginning probably Monday, but certainly by Tuesday or Wednesday, you're going to see a complete collapse in volume. The 4th is on what is the 4th? Is it on a Friday? Let me take a look here. We need to know that. The 4th is on Friday. So you can just bet by Wednesday, it will be you and me trading and no one else. Okay, so here we are. Let's look at the internals. Now, this is the chart that I show every week, and it's the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. And I always caution that this is to be taken within context. And you take it in a different context in a bull trend than you do in a bear trend. It is very good at helping to identify lows. It is not very good at helping to identify tops. However, there is a very significant divergence forming right now between recent highs in both the 5-day and the 10-day moving average of NYSE advancing issues and the higher highs in indices. Now, this can go on for a long time. This can go on for weeks before there's any sort of downside retracement that would appear to have been triggered by this divergence. It's correlation, though not causation. But again, it's something just to be paying attention to. It's certainly not a sell signal, but again, it's something I monitor, I point it out, we follow it, and I'm just pointing it out. Again, if this is portending some sort of retracement in the next week or so, it's unlikely that whatever top is formed and however deep that retracement is, it's unlikely that we will have seen the bull market high. And that's because breadth has been of the cumulative NYSE advanced decline line has been so strong, and you're having broadening participation, as you can see in those indices, even though some of them are lagging. You guys have a wonderful 4th of July. Hope you found value in this. If you did, please like, please subscribe. Be safe. I will speak with you again very soon.